Hello and welcome. I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we break down the day's action on Dalal Street. And Indian markets, they have ended the week on a high, with Nifty closing above 22,000 levels for the first time in over a month. Nifty at close was up 0.5% at 22,040 levels, and for the entire week the index is up about 1% or so. Sensex also surged 0.5% in today's trade and ended above 72,400 levels on the Friday's trade, and for the week Sensex is up about 1% as well. On the whole, if you look at today's session, it was a rather uneventful one, as Nifty traded in a tight range of about 60 points throughout the day. And on the downside, we saw some good support emerging for the index at around 22,000 level. So going forward, that becomes a critical level to track for us for further upside. If we break below the 22,000 mark, then we have 21,850 as an important support, as it has been a key hurdle for the index in the last 1 month. And after 21,750, 21,700, which is a 20-day moving average for the Nifty, becomes support number 3. So as long as the index respect these levels, one can use a buy on dip strategy, as the overall texture of the market remains bullish. On the upside, however, Nifty has a key hurdle at 22,120 to 22,130 levels, which by the way is a previous record high for the index. And if you'd recall, Nifty has reversed its course at least twice around these levels, and we have formed a double top pattern on the price charts for Nifty as well. So that is a key level to track for a breakout. And if there is indeed a breakout and we are able to move above that, the next hurdle for the index will come at 22,395 mark, which by the way is the 127.2% Fibonacci extension level, followed by 22,535, the 141.4% extension level. Again, we are extrapolating the numbers from the recent low of 21,137 to the most recent record high of 22,126. But moving on to the broader markets, they ended in line with the headliners today. The mid-cap index surged 0.64%. It is back above 49,000 mark after a gap of 3 sessions almost. And with this, the mid-cap index has also retraced, or rather almost retraced, the 78.6% retracement level of the entire fall from the record high to the most recent low. And if you look at the weekly performance of the mid-cap index, it has surged about 0.5% as well, and it's a third weekly close in the green for the index. The small cap index also surged 0.5% in today's session, and it closed just a shade below the 16,200 level. And for the week, actually it's down 0.5% or so, and this is the second weekly close in the red for Nifty small cap in a row. Now, India VIX, the volatility index, settled on a flattish note today at 15.22 levels, but overall we have seen a good decline in volatility through the week. If you remember, in the first couple of sessions, India VIX was above 16 levels and it was approaching a 52-week high, which is at around 16.4, 16.5 levels. But by the week's end, we are back at 15 sort of levels, and I think that is something the bulls will certainly appreciate. But let's move on to the sectors and see how they perform today. And let's start with Nifty Bank first, because over the past 1 week, that has been a major driver for the index, for the headliners I'm talking about, and it has surged by about 1.5%. And that, by the way, today's close was the highest close for the index in over a month. But if you look at today's session, we saw some bit of signs of exhaustion at higher levels, as Nifty, Bank Nifty I'm talking about, gave away over 300 points from its day's high. And I think one of the reasons why we saw this bit of correction from the day's high was the PSU banking pack. You can see on your screen, Nifty PSU Bank is the only sector that ended with cuts, but remember, the index had been on the high. It had rallied by about 3% or so before today's marginal correction. So we are seeing some bit of profit taking take place at higher levels. But if you look at Nifty Bank in today's session overall, it was able to end in the green with gains of about 0.3%. Nifty Auto was the best performer today. It surged over 2.2%, and in fact it has been the best performing sectoral index in this entire week. It has surged by about 4% or so, and a lot of these gains have come from Mahindra and Mahindra. Remember, Mahindra and Mahindra is up almost 11% in just 2 sessions after the company declared robust set of numbers for the December quarter, and post the earnings, multiple brokerages have also revised the price targets on Mahindra. Maruti Suzuki is another one that is leading the index or pushing the index higher. It has also rallied by about 4-5% in a matter of just 2 sessions. So Nifty Auto was your best sectoral performer this week. But Nifty Pharma Nifty Pharma was another index. In fact, Nifty Pharma, Realty also, and whereas the IT pack, these 3 indices also ended about 1% higher in today's trade. And specifically for the IT and the pharma pack, when we were seeing the markets turn choppy and we were seeing some bit of a correction, those were the only indices that were performing. And as you can see on your screen, the overall breadth of the market is also favoring the bulls now. Around 1500 shares advanced in today's trade, whereas around 1000 shares declined. 121 stocks were able to hit their upper circuit, today, whereas 47 stocks were stuck at the lower circuit. And see, 154 stocks scaled a fresh 52-week high. That actually is a testament that the markets are in fact on the path to recovery. And great performance from the Indian markets in the last 3-4 sessions. In fact, very good recovery, where we were testing the lowest levels in a while. We were testing this bottom end of the range of about 21,500 on the index, but we have rallied by about 500 points on Nifty, and that is just in a matter of 3-4 sessions. But before we wrap things up, let's look at some of the top global stories as well. And let's start with the Wall Street, because US stocks closed higher on Thursday on hopes of a potential interest rate cut following a retail sales slump. The Dow Jones rose about 0.9%, the S&P 500 climbed nearly 0.6%, and the Nasdaq added 0.3%. A Commerce Department report revealed a 0.8% drop in US retail sales for the month of January, which was a bigger decline that was expected. More details in this Reuters report.
U.S. stocks closed higher on Thursday as investors hoped data showing a retail sales slump might compel the Federal Reserve to start cutting interest rates in the coming months. The Dow gained 0.9%, the S&P 500 climbed nearly 0.6%, and the Nasdaq added 0.3%. A Commerce Department report showed U.S. retail sales dropped 0.8% in January, which was a bigger decline than expected. That edged up bets for a Fed rate cut in May, but most investors still think June is more likely, according to the CME Group's FedWatch tool. Investor optimism has been buoyed by earnings, as roughly 80% of S&P 500 companies have beaten Wall Street's expectations, LSEG data showed. Robert Conzo, CEO and Managing Director of the Wealth Alliance, believes that's because most businesses have spent the past 18 months or so preparing for a recession, which so far hasn't come.
When you set up for something bad that doesn't happen, at the end of the day, that's probably a pretty good thing. And I think companies are managing their P&Ls very, very well and managing to get the bottom line stronger and stronger and stronger. And on top of that, you have a consumer that still is resilient. They are still driving forward, spending on and on and on. So you got a consumer spending, you got companies that are managing their P&L real strong. And I think that's really why that we have a revenue stream happening the way it is.
In company news, Google parent Alphabet dropped more than 2% after investment firm Third Point dissolved its stake in the tech giant. And Apple shares were pressured during the session as Warren Buffett's Berkshire Hathaway trimmed its large stake in the iPhone maker, and Soros Fund Management entirely dissolved its stake. But the stock bounced back in late trading and closed down only marginally. On Friday, a producer price index report will provide more clues about the direction of the economy.
Moving on, Britain's economy entered a recession last year with GDP contracting by 0.3% in December alone, following a 0.1% decline in the preceding quarter. The Office for National Statistics cited manufacturing, construction and wholesale sector as major contributors to this downturn. Now, despite stagnation for almost 2 years, there is a slight anticipated recovery in 2024. This, by the way, poses a challenge for Prime Minister Rishi Sunak, who promised growth ahead of the upcoming elections. Listen to this Reuters report.
Britain's economy fell into a recession in the second half of last year. Official data released Thursday showed gross domestic product contracted by a worse than expected 0.3% in the 3 months to December. That follows another decline over the period between July and September of 0.1%. Britain's Office for National Statistics said the Q4 fall in GDP was the biggest since the first quarter of 2021 in the depths of the health crisis. It further indicated manufacturing, construction and wholesale sectors were the largest contributors to the decrease. The country's economy has stagnated for nearly 2 years, though the Bank of England expects it to pick up slightly in 2024. Thursday's data was not good news for Prime Minister Rishi Sunak, who has promised to boost growth ahead of an election expected this year. Finance Minister Jeremy Hunt said there were signs the British economy is turning a corner. He also argued authorities must stick to the plan of cutting taxes on work and business to build a stronger economy. Media reports said Hunt aims to cut billions of pounds from public spending plans. He wants this to fund pre-election tax cuts in his March 6th budget.
Japan's economy has slipped into recession, contracting for 2 consecutive quarters due to weak domestic demand. This downturn has cast a doubt on the central bank's plan to exit its ultra-easy policy this year. Japan's unexpectedly weak economy in the fourth quarter is a result of a slowdown in spending by businesses and consumers, who are grappling with inflation, which is at a 4-decade high, and a weak yen and climbing food prices as well. Listen in.
Japan has seen a surprise slide into recession as shoppers and businesses prove reluctant to spend. Figures out Thursday showed GDP falling 0.4% at an annual rate over the October to December quarter. Analysts had expected a solid increase. Instead, the number marked the second straight quarter of contraction, the usual definition of recession. Private consumption, which makes up more than half of all economic activity, was one big negative, falling 0.2%. But capital spending by firms also fell. Those factors overwhelmed a solid rise in exports. Now some economists fear the current quarter could also see a contraction, with negatives including the aftermath of Japan's New Year's Day earthquake. That all poses a fresh dilemma for the Bank of Japan. It had been expected to start moving away from negative interest rates in the coming months, but Governor Kazuo Ueda has said he wants to see signs that rising wages are driving consumption before he acts. Thursday's numbers suggest Ueda may not get the signals he wants to start raising rates. Some economists predict the central bank may even have to sharply downgrade its GDP forecasts. Japan's Nikkei stock index rose around 1% after the data, suggesting some traders are betting rates will stay low for longer than previously expected.
And that's all we have in this edition of Last Tick. Keep watching News 9.
From Fragile 5 to Top 5, from a laggard to a leader, India under Modi has reimagined the world order. Presenting the second edition of TV9, What India Thinks Today. Summit theme, India poised for the next big leap. Listen to Prime Minister Modi unveil his vision for Viksit Bharat at News 9 Global Summit, a TV9 network initiative.